Hello, welcome back to The Note. Let's take a look at Russia today. Many people find Russia a very interesting, very intriguing investment, but perceptions of the whole country tend to be swamped by perceptions of its longtime leader, Vladimir Putin. Does it really make sense to invest in Russia as we head into 2014? With me now to discuss this is the Chief Investment Strategist for Sberbank, Kingsmill Bond. Kingsmill, thanks for joining me here today.
Thanks, Tom.
Let's start by taking a look at some research you did on the debt market in Russia, which suggests that it's really a very immature financial market, even compared with other emerging markets. What's going on here?
Well, I think the point here simply is that the size of the Russian Eurobond market relative to the local debt market, they're very similar in size. And in other emerging markets, your domestic capital is much larger. And that creates a degree of dependency upon foreign capital, which is greater in Russia than you might anticipate.
Okay, now let's take a look at that dependency on foreign capital with this other chart that you produced. It shows the share of equity market ownership in Russia. So as I understand this, tell me if this is an exaggeration, basically the price that's set on those free-floating shares is almost completely set by foreign investors, and yet they have substantially no control over the stocks they own. Is that fair?
They exercise limited control, and that is indeed the case. And this is why Russia is such a volatile market, and why it is that foreign perception matters so much in the market. So whilst, as this chart demonstrates, foreign investors have only 25% of the market, they've got something like 70% of the free float. And that means that, yes, their perception is highly important to the performance of the Russian market, which is why Russia is often one of the most volatile markets in the world.
And it's fair to say that most of that investment is being done passively at the moment through ETFs and so on, or are there specialist investors?
There's a lot of specialist money. I mean, if you look at the total amount of foreign investment in Russia, something like 15% is going through ETFs of some sort or another, but actually the rest of it is global funds and gem funds. And one of the interesting things about Russia is that over the last 5 or 6 years, you've seen a huge increase in global fund interest in some of Russia's larger stocks.
Okay, let's now take a look at how this year has gone. And one's general perception of Russia is that it's driven very much by the oil price.
Yes.
But it did come detached for a while this year. What was the problem there? So
precisely as you say, the Russian market is really moved by two factors in the long term: the oil price and foreign perception of reform. What then happened in the middle of the year here is that Russia got dragged down with other emerging markets because of fear of the ending of QE and what it would mean for emerging markets.
Right. Taper talk damaged it as much as anybody else.
Yes.
Now, given the current geopolitical situation, I've heard quite a few people suggesting that oil could be heading down. Plainly, the central market anticipation is that we do get a taper next year.
Yes.
That doesn't sound good, therefore, for Russian stocks next year.
It's going to be a tough year, I believe, in 2014. The two principal drivers of the market, consequently, are unlikely to be terribly positive. That doesn't, of course, mean you can't make money. And one of the glorious...
I thought you might say that as an investment banker in Russia.
Yes. One of the glorious things about Russia is that you have an environment of continued very high oil prices. So around $100 is still very high oil, and there's very limited domestic capital, which actually means that you have very high levels of ROE in Russia, structurally high ROE in the right sectors. And that in turn...
And those sectors would be what? Plays on middle class growth? Where?
Well, there's three stories really which work in Russia. The first one is the low penetration early stage companies. So 5 years ago, that was the banking sector. 10 years ago, it was the mobile phone sector. Now it's the real estate sector. So the average Russian has about half the amount of housing space per capita the average European does. The internet sector, so e-commerce in Russia is about one fifth or 1/6 of the penetration of Europe. And people often laugh when you say this, and they say, well, it's not going to happen. But actually, it has happened in the mobile phone sector. It's happened in plenty of sectors where you've seen huge growth. So that's one angle. The other angle is dividends. Russia's got the highest dividend yield in GEM, and a series of relatively high dividend yielders. And then the final angle, as ever in Russia, is change.
Right. Change, providing we get some, that'll be good for stocks.
Yes, and the hope for reform.
Okay, Kingsmill, thank you very much indeed.
Thank you.
I think that was a good and honest assessment. Plainly, if you're thinking of making a blanket investment through ETFs in Russia next year, doesn't necessarily look that optimistic, but as ever, it does look as though there might be value to be found there somewhere.